Money FM 89.3, the best of the afternoon update. Market View on Money FM 89.3.
A day after Nvidia reported solid earnings and provided a revenue forecast for the April quarter that was ahead of expectations, the leading AI chipmaker saw its stock drop 8.5%, its steepest decline in a month. Let's find out why Nvidia shares are down and what actually happened in the overnight session. Joining me now is Isaac Lim, Chief Market Strategist of investment and trading platform Moomoo Singapore. Hello, Isaac. Good to have you on the show again.
I'm glad to be back on the show with you as well.
Okay, Isaac, let's get straight into it. Nvidia shares gave up early gains after it reported earnings that topped estimates. Now, this is significant, right? Because Nvidia is the most influential group and the sell-off drove the Nasdaq 100 to its lowest level since November, evaporating, $274 billion in stock market value. Looks like investors may have expected more from the AI darling. What's your take on this?
Yeah, I think this was a very unique case that investors was expecting a much better than expected earnings. The way I would put it would be if you're always getting 90s out of 100s for your exam, and then this time round, Nvidia gets 95 out of 100, the expectations of the market, of the parents, would then be, since you got 95 out of 100, couldn't you have just gone for 100 out of 100? So that's the analogy that I would give. I mean, if you were to look at the performance of the earnings, right, we actually beat the earnings about a good 5.5%, and revenue also came in higher at about 2.8%. So by all means, it's not a bad result. It's just not better than expected.
Okay, so what actually happened?
There were a multiple confluence of factors that really led to this decline in Nvidia stock. Of course, the main thing was that, it did not beat expectations by a wider than expected margin. The second thing is that, ever since Chinese AI DeepSeek came on the scene, now people are starting to think, do we really need even more powerful AI chips from Nvidia, or what we have currently would suffice? Right? That is the additional factor that would cause the deeper than expected lower price trading that we're seeing now.
Okay. Nvidia's latest quarterly report surpassed Wall Street expectations, and the company reported fiscal first quarter sales guidance of approximately $43 billion. It's slightly ahead of analysts' $42.3 billion average estimate, but just falling short of some higher projections that reached $48 billion. Like you said, why can't you get that 100 points, right? So the growth numbers are impressive, even for the world of technology. What else can you tell us about Nvidia's fundamental outlook?
Yeah, I think, at the end of the day, CEO Jensen Huang was actually very forward-looking. If you look at the tone of his earnings during the tone of his announcement during the call, he did say that for the first time, they managed to ramp up the production of the Blackwell chips, and they could actually meet future demands, right? So I think the market is sort of overblowing this. I do think that the forward guidance is actually quite promising. Contrast this to other Max 7 counters like Microsoft and Amazon. During Microsoft and Amazon's earnings, right, they beat earnings, but their forward guidance wasn't as rosy as how Nvidia portrayed it to be. Right, Amazon said, going forward, we might have some issues meeting supply, the AI supply and the AI demands of our Amazon Web Services going forward. Same thing for Microsoft, we're having trouble meeting forward-looking AI demands. But this is really not the case with Nvidia, right? Jensen Huang was very clear that we will have an issue meeting future demands. We have already ramped up production in line with the market's expectations.
So you think it's going to be a strong outlook? You're bullish on this?
Yeah, I do think that in the long term, Nvidia is definitely still bullish for me. What we're seeing now, this weakness in the markets, right, is really a confluence of factors. Nvidia's less than rosy, not really less than rosy, but just slightly beating expectations really didn't help the case. And, before we hopped on the call, you rightly pointed out that Donald Trump was going ahead with increasing tech tariffs on Canada, Mexico, and he also increased another 10% on China. So all these things are coming together now where we're sort of spooking the markets, right? That, hey, maybe the tariff war, the trade war 2.0 is really going to start. So let's start pulling out our capital take a more wait-and-see approach and see where else we can rotate this to.
Okay, just switching gears a little bit. We haven't really heard much about succession planning or who are the strong players within Nvidia. Any thoughts around that?
Oh, that is a good question, Lynn, but your guess is as best as mine. I think at this point in time, the focus is still very much on generative AI, and then moving forward to see how we can shift this generative AI into the next gear, right? How Nvidia can come up with cheaper and more powerful chips for the retail side, and yet at the same time still continue to serve the needs of those bigger companies, the industrial side of things.
Okay, thank you so much for your views today, Isaac. Always lovely to speak with you. Isaac Lim, the Chief Market Strategist of investment and trading platform Moomoo Singapore.
Speak to you again.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.